This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Invest Like a Pro, and so I'm going to do a market update. I'm going to go through all the market conditions. Now, I'm in a hotel. Hopefully this all goes well. Probably going to be a little bit shorter than normal just because I want to make sure I can get through it and get through all the key points. But I do want to talk about a few key changes that took place this week in the market conditions. Is something we have to watch for coming up over the next few weeks. And then also there's a trade setup that I want to talk about. So let me go ahead and get going on this. Okay, so as I get into the market conditions, I do suggest you take a screenshot of this. I was thinking about it. If you have a 3-ring binder, you can take a screenshot of this. You'll have a picture of the daily ATR and what's taking place relative to its moving average. You'll have the weekly ATR relative to its moving average. You have the overbought, oversold, the 5 RSI overbought, oversold, which keeps hanging around the neutral area. And then you'll have this box that I just put together in a workbook in Excel. And you could do that yourself as well. I mean, there's nothing wrong with that. But I just figure I think it's kind of cool the way this is playing out. So there's small changes that are taking place, but if we don't have anything in the negative column. I mean, this isn't a big deal to you, but in my mind, even though I didn't have this set up like this, I know we had so many of these filled negative a few months back. I mean, it wasn't that long ago where a lot of these were on the negative side. But a few key things took place. Number one, the momentum on the daily is now confirming price. I'll go into that in detail in a second. And then also the volatility on the weekly is now neutral. So very, very important. Now, before I get into the charts, I do want to mention the sentiment. And what I've got here is there wasn't a huge change. It did jump again, and it's a plus 11. That means there's 11% more bulls than bears right now. Now, we're coming from a point where we were negative 19, meaning there was 19% more bears than bulls. And I'm going to try and explain this so that it makes sense. The way I use this sentiment number is when we're negative, I want to focus in on the bears and how bearish they're getting, and are they getting too bearish? And then when we turn positive, I want to focus in on the bulls. So right now they're at 42%. So there's 42% bulls. And you can do the math if you look at that. I'm going to try and keep this up to date this way so you'll know. 42 minus 11 will tell you how many bears there are, right? So you can look at it that way if you want. Now, what I want to say here is that until we get up into the 50s, probably more like the mid 50s, I wouldn't look at this as a negative. But if the number of bulls gets up towards 52, 53, 54%, this neutral is going to go to negative. Okay. Now, if that takes place and the overbought, oversold oscillator 5 RSI works its way up to overbought, then that's kind of a short-term negative. Even if we have all of these turning positive, right, then it starts to be a warning sign. So that's how you want to use these. I've got these separated on the bottom specifically for that reason, because all of this stuff can look really good here, and these two could give you a warning sign that you got to be a little bit more careful. So what these are doing, they're telling you when to kind of maybe be a little bit more defensive in a bullish environment. Okay, so we want to be on the lookout for that. So we'll see what happens with that. We'll see if we get more bulls. I mean, we might not. If it's possible the market won't keep climbing. Although I think at least what's taken place so far this week has been positive. So we're going to get into that in a second. But let's just go into this a little bit more detail. Look at how much more pronounced this 18-day moving average of the ATR is. Notice how we've clearly made the 1, 2, 3 going back down. We definitely had a move up, break of the trend line, which is the 18 essentially, rally back up and test, and now we've come to a new low. This trend is down right now. Now, I don't know how long that's going to last, and we don't need to know. As long as this is trending below a declining moving average, you know that we have lower volatility, and it's a better environment for swing trading. Now, I'm going to go into this trade coming up on this pullback here. And what I'll tell you is that this is a trade that if you're a swing trader, you're playing off the daily chart and you're triggering off the hourly, you have to take this trade when the conditions are like this. Okay, we don't have any real bearish sentiment. We're not dramatically overbought or oversold. We have a declining ATR environment for the first time. You want to make sure you're taking these kind of trades. And you can do that in the face of a bearish or neutral environment in the longer trends, as long as there's room. And I'll show you in a minute why I think there was room. Now, one of the key things I wanted to show here is we did take the ATR on the weekly, and it broke its moving average. So that moves that to neutral. That moves that to the neutral camp for the first time. Really, this whole year it's been negative, and for the first time that's changing. Now we went to neutral here as well, but notice the difference in the slope. You see how strong the slope was when it broke it at this point? So that did go to neutral, but it had a much stronger slope to it. This has been really flat. This will not take very long. If this continues, if the market keeps creeping higher and this keeps dropping, this will not take very long to turn this positive. So I wanted to bring that up. Again, overbought, oversold, pretty neutral. Let's go ahead and get into the charts now. And I want you to look at this monthly chart for a second, because if you look at the way, at least the way it hits me, when I looked at this, I'm like, this looks so neutral now. It almost looks like it's caught in a range between the 40 and the 18. I'm not saying that 18 isn't going to be a problem. It very well could be. But when I look at it in these terms and the way it looks right now, and the way the 40 seems to have provided pretty good support here, it gives me a pretty strong feeling that it wants to work its way up towards the 18. That's the feeling I get when I look at this chart. As I've mentioned, when MACD breaks the signal line or breaks its trend line coming up, you want to be a little bit more bearish on the MACD. But because this has dropped so much and there's some distance between the MACD and its signal line, we should be expecting some kind of little, retracement back towards it. So we don't really have a pattern or any strength on the buyers or the sellers. Yes, red is above green, but both of them are below 25. So I'm pretty much looking at that as a neutral situation. I mentioned last week on the weekly chart how we had a pause, a move above the moving average. And then last week we ended up pausing and holding this moving average, which is now starting to turn up. Now look at how we're caught between these two moving averages, and we have a declining 40 and a rising 18. But remember, 18 turned down way up here in February and has been declining ever since. This is the first time in a long time, pretty much the whole year, that this line is getting very, very close to turning up. It's not quite there, but if we get through the 40, you're going to have a rising 18 here. And I think that, again, just it's supporting evidence to expect a move back up into this bigger resistance area and possibly higher, depending on how we look in terms of momentum. Right now, we don't really have great momentum on the weekly. Look at this weekly. Green DI is still at like 20, and red is up around 23. I mean, they're not crisscrossing. So it's right now, looking at this, I'm looking at this as a divergent pattern where we're going to work our way up towards the zero line, but I don't know that I'm looking for this to be a big reversal yet. But I'm willing to adapt as new price bars come in. If we see improving strength, then I'll change my opinion. Right now, I would say I have a target up at this prior high. In the S&P, it's around 4,300. Let's look at the daily chart, because we're going to talk about this trade. And I do think you want to make sure you're looking at this, right? And then you look at this. And then you want to go and look at, MACD was crossing here. And it had already crossed and given one pinch here, but we got another one there. And then look at how green DI held here. And then look at what green DI did here. This is mimicking what happened back in July. I actually have done one post on Twitter. I just got on Twitter. I don't know if I'm not sure about that. I'm probably going to start posting a little bit more often. So if you want to connect on there, that's fine. But I mentioned this, I showed this, and I circled these two, the green DI. And I said, if we make a higher pivot low, then you kind of have to assume we're doing something like this, what happened in July. I think there's a very high probability that's what we're doing. Now, I want to point something out, and that is when you get this pattern, and we know we have declining volatility, and we know we have a pinch play, we have 18 above the 40, both lines rising. We've got green DI turning up. Now, ADX is rising, but it's below 25. So is this a good trade? Well, it's a good trade for me, because I'm looking at it as a reversal pattern. If it's a reversal pattern, then I don't necessarily have to have the ADX above 25. It's one of the things I talk about in the course. I go into a little bit more detail in the course than I really have the time for on these videos. So anyway, so we get a move and then we get a pullback. Now, when we get a pullback, we're looking at a pullback play, we go to our lower time frame, and this pullback here is this pullback here. Now, if I'm just using one time frame and I'm looking at this daily chart, the moment I take out this prior bar's high, this bar's high right here, this high, I'm thinking I got to get long if I'm on just one time frame. But I don't do that. I'm looking at this and saying, okay, now let me see what's going on this time frame. And it just makes it so crystal clear once you learn the rules of the different types of strategies to enter. So I know I'm looking for a trend line to draw, and I really can't draw a trend line. I don't have a good pivot point to really use as a trend line, really. I mean, I could fake it and just kind of connect these and say, okay, yeah, it's a trend line. But I don't usually do that. I rely on the 18. And I know the 18 was falling here, and then it starts rising here. So what I'm going to do in this situation is see how this reacts. Now, on these two bars, we had qualifying setup bars. That's where the 18 crosses down below the 40 and price is below both. And if you notice, we tried to cross right back above to the upside, but we weren't able to close above it. It gapped up and gave it back. So I'm on the alert as this is turning back up, but I'm probably not interested in this happening this quickly, although you could take this trade. But here's the way I'm looking at it. We got this move to the upside and then we come back down. I'm looking for a big green bar now. I don't think this is a positive bar, and this is a positive bar, but they're not like big definitive bars. If I get big definitive bar or a gap, I want to play now. And I don't need to have it cross the 40 to do it. I would love for this to have been come down a little bit more and then have a big green bar crossing back above the 18. That'll get me in well above the 3. Because remember, if I'm looking at this as a entry, I've got to pretty much get back above this high or make it close above the 40. In this situation, I'm probably looking at being long on this bar, frankly. I mean, that's how I would look at it. We have a zero line reversal, but we don't really have a good trend line drawn in. So a lot of times what I do in that situation is draw a horizontal line here. But because we had a really good gap up close above the 40, I would take that ahead of this. I wouldn't wait for this high to be taken out. Either way, we've had really nice follow through. But if you look at these two time frames together, you can see a nice pullback here and a really nice opposing trend pattern. Depending on how you interpreted this, it might have caused for a few stressful days. And if you end up taking this signal, this is my suggestion. There's nothing wrong with going long here. But then if it's a questionable entry in your view, don't use this low, use this low. Give it a little extra room. You go an extra one back. Okay, this is a key thing I think I want you to understand. Every time you put on a trade, you determine how good of setup it is. If the setup is really good, then you can use the most recent bottom. If the setup is a little questionable and you're not really sure, you got a big red bar here, you're pretty close to, use the next pivot low, the prior one, and that gives you a little bit more room here to play. And in this case, you wouldn't have been stopped out. It came down and then really gave the trigger, I think, a little bit later. So anyway, that is the update for the week. I did want to go into a little bit of detail on that setup. Overall, market action's looking pretty good. It looks like it wants to climb higher. And it looks like we made it through Fed Day today, at least the minutes. So anyway, you guys let me know if you have any questions or comments. We'll see you next time. Thanks.